For TraderInsight.com, this is Adrian Manz. I would like to have a quick look here at the intraday trading plan for January the 7th, 2009. I want to talk about some position management stuff. We had four potential trades this morning: Allegheny Energy Incorporated, AYE. We had El Paso, ticker symbol EP, Helmerich and Payne, ticker symbol HP, and Valero Energy Corporation, ticker symbol VLO. Of course, everything triggered. Of course, it all had to happen right off the open. In terms of these gaps, Helmerich and Payne, HP, was the one that we did not take. That one gapped too far too fast for us, would have had too much slippage. Got everything else with a variety of slips, in some cases as much as a dime, but I'll take a 10-cent slip. That's really not a problem for me. But what I want to look at here quickly is the Valero Corp trade and how we managed it. Now, at the time that I'm recording this, it's down 23.48. We've already exited the trade. I did not, of course, get the low tick of the day, which was 23.05, but I'd like to have a look here at the trade management and how we made the decision to exit this setup. This is a 25 tick chart on VLO. What we see here is support and resistance that established itself around 10:30 during the session. Here we've got a nice base, and then we have these tops that represented resistance. We set the stop with a trigger of 23.41, so when it moved above this range here, it would pop us back out again. As it turned out, that was probably a little bit tight. Sometimes when you're doing these things on the fly, you might get a little tighter than you'd like to in retrospect, but hindsight's always 20/20, right? But this range right here on a 25 tick chart was not at all evident on the 5-minute chart. We'll look at a 5-minute in a second here. It's just a big bar to the downside. So if your choices are exit right at the profit target, 23.59, or ride lower and see what happens, this extra 54 cents was a nice potential move lower, and of course setting the stop here at 23.41 got you almost 20 cents of that move. And when we got up above that support and resistance area, when it ticked up through there, we took off the trade at 23.40, 23.41 trigger. So, you know, as the trade went on, of course, as always happens, right, there's a lot of volatility in oil to begin with, and today's volatility was on the downside. But we see here that in a 25 tick time frame, we did have a move back lower again to retest like 23.10, but that stop level was penetrated a couple times and eventually would have got you all the way back up to the initial profit target before moving lower again. So now let's have a quick look here at what this looked like on a 5-minute chart, and you'll see the difference when you're using 25 tick charts. So on a 5-minute time frame, the only thing that we saw during that 5 minutes was this bar here. So it's very hard trading just from a 5-minute chart to set that trailing stop based on the price action alone. Now, you could go and break this down to, say, a 1-minute chart on a stock like Valero. That's not the worst thing in the world. On stocks that are more thinly traded, 1-minute chart, just changing the time compression to 1 minute doesn't really have the same effect as going to a 25 tick chart. 25 tick chart takes the time factor out of the equation and gives you a stop that's based on pure price. Now, if you have any questions about using 25 tick charts, give a look at Julie's articles on the site about them, or shoot us an email if you can't find them, and we'll send you the links. And of course, as always, refer to Around the Horn, a trader's guide to consistently scoring in the markets, for information about trade management and what the Infield fly setup itself is all about. But I guess my guess is that most of you guys know that by now. So, hey, for TraderInsight.com, this is Adrian Manz. Have a good rest of the trading day on Wednesday.